Hello and welcome to the Cryptocurrency News Channel. So this is the TAFA and chart analysis for January 26, 2022. And important things happened today. Jerome Powell, the mighty Fed chairman, did not raise interest rates, at least not yet. So heading into that, that was really good news. And the market, you can see, spiked to about $39,000 here. But then again, he actually said we are going to raise interest rates starting in March, and it tumbled down to about 36,000, and now it's around $37,000. So it's been an on and off day. Now, do I think the Fed did the right thing? Absolutely not. I think the Fed should have stuck to their guns and raised the interest rates because this creates a lot of uncertainty. Would raising the interest rates actually help the market? No, it would have temporarily hurt the market, but you're just basically holding the pain for much more pain later. You cannot keep interest rates so low for so long, and I think they should have stuck to their guns. They should have stuck to their guns 5 years ago, and they should have stuck to their guns now, but they didn't do either time. So they're basically afraid of short-term market drops, but they're just prolonging the long-term pain for later. So definitely not something that I would really like. But either way, overall, the net effect on the market is negative. Overall, the net effect on the market is pretty neutral. I do think we will actually open higher tomorrow. Not really because of Powell's announcement, but because Tesla's earnings were much, much better than expectations, and they beat the market forecast. My guess is Apple's earnings are going to be decently good too, so that should actually give us like a leg up going on into Friday. And yes, there are futures expiries on Friday, but if they would have actually provoked any kind of price change, it probably would have happened by now. So good earnings from Tesla, hopefully from Apple, should actually push it up. Market's still extremely volatile right now. The volume is very, very low. And with the volume being very low, a lot of big buys and sells could actually affect the market very easily. Now, if you actually look at whale alerts, you should keep track of that. Any huge movement of BTC from a wallet to an exchange should be tracked, and that could actually result in the sell-off. Now, I do think the fat cats and the whales actually did manipulate today's market. I don't know if they had news of what Jerome Powell decided, but they definitely did pump the market up in the hours leading up to Powell's speech, and then they just dumped it right afterwards. There was definitely a lot of market manipulation and pump and dump mechanics there. And then, Elon Musk's announcement of Tesla's earnings didn't really help the market all that much because it was mostly after hours, and the market had already closed by then. But at this point, I would think the DJIA futures would actually be positive going into tomorrow. So we could have a very positive opening tomorrow. Yeah, pre-market up 66. Still not changed that much, but good Tesla earnings definitely should help us going into tomorrow. And that's kind of like my view on the entire thing. We should open positive tomorrow, but we could have a dip later tomorrow afternoon. Not really sure. We'll have to see what Asia does. But at least the Fed did not destroy us with interest rates, although I think they should have upped them by 25 basis points like everyone expected. I still expect 4 rate hikes by the end of this year, bringing us to 1% interest rate. If they don't do that, they're just saving the pain for the years afterwards. So I would rather them do that and stick to their plan of getting to 2.25% by 2025, because I think that's at least a bottom line of what we should be at by then for the greater economy. Now, looking at the technicals for right now, if you look at the daily, basically we're neutral when it comes to oscillators. The RSI is almost oversold, but not really. The average directional index is fairly strong at 43 for the daily at least. The momentum is shifting a little bit back towards buy, but definitely don't read much into that. The MACD is still sell, and the commodity channel index is no longer oversold. So all the oscillators are moving towards neutral. Maybe that actually means we've hit a bottom, but of course that could change very quickly if Russia invades Ukraine. So right now it looks like we're settling down just a little bit. Still not a really good time to buy unless you're playing for really early tomorrow morning and we're opening on a positive note if you're leveraging. Like I said, I do not encourage leveraging. I am very, very much against leveraging, so I wouldn't do that. But I do think we are going to open tomorrow based on Tesla's earnings late today. Exponential moving average wise and simple moving average wise, we're still all negative, and the 50 EMA is still well below the 200 EMA. So the golden cross has not actually been achieved. The death cross is still there. And I do think like overall, I don't think I would make any moves in the next couple of days. Yes, Apple's earnings definitely could swing it, and yes, we might move up a little bit at the beginning of tomorrow, but it's definitely not a surefire thing, and it's not a very very strong signal because all the indicators are still sell, and the momentum is definitely still favoring sell for me right now. Because we've been down for the last couple of weeks, and I really don't know if we've actually hit a bottom or not. We've just been seeming to move lower and lower. We would have to make 44,500 at least first for me to see any chance of a real bullish signal, and we're nowhere close to that right now. On the 1 week, we are still very bearish. I think the oscillators seem to say buy on the 1 week. The commodity channel index is oversold. There's no real direction here for the weekly. And the RSI, the stochastic is also oversold. So because of that, I would say like the oscillators favor buy on the weekly. So if you're buying towards the end of this week and the next week, it actually might be positive. The MACD is obviously negative still, but the momentum is actually swinging more positive right now compared to what it actually was. But we're still like clear on the sell all the way down to the 50. Only the 100 you can actually see the buy. And that's just not a very good signal for buying right now. It could be until like later in Q1 or Q2 before we really start to recover. On the weekly, like I would actually look at at least the I would say at least the 50 moving average and the 50 simple average to turn back to buy before I'd really consider it being bullish on the weekly. And right now we're very far from that. On the monthly, still not that bullish on the monthly. I mean, I really only look at the 10. I want the 10 moving average to move back into the buy section before I call like a bullish market on the monthly. Realistically, like everything is neutral on the monthly on the oscillator, so there's not really much to report there. But like I said, like everything is hinging around the 44,000, 45,000 zone right now. So if we don't achieve that mark, I don't think I can say like it's a bull market for any of the daily, weekly, or monthly because they all kind of hinge around there. And I think also around there is where you're going to kind of start getting the 50 EMA getting above the 200 EMA. Especially at above 50,000, it's definitely reversed into bull, but at least you have to get to the 44,000 to even have a chance of having any real positive signals right now. And we're still about 6,000 or 7,000 away from that. Hopefully we can get a little bit of a bounce, but I wouldn't really expect anything before early February at earliest. And probably like maybe we'll have to look toward the end of Q1 to really be positive. I think for all intents and purposes, like the COVID has basically stopped affecting the economy all that much. Employment's basically at a very low rate right now. And I think the Fed should take this time to actually raise interest rates. Yes, there's short-term pain, but if you want to ensure like long-term financial stability and prosperity, you do need to raise interest rates a little bit faster than they have actually right now. So that's the news for today. Let me know what you think. Like and subscribe and hit that bell notifications button. Thank you and have a nice day.